Gold prices have surged by over 1% today as the conflict between Israel and the Palestinian terrorist group Hamas escalated over the weekend, killing hundreds of people on both sides. As a result, people have rushed to buy precious metals like gold and silver because of the safe haven appeal. But will these gold prices rise even further, and that too right ahead of the festive season? Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is a show where we will tell you where exactly are the gold prices headed. And joining us to help us with this is a gold expert. Vandana Bharti joins in, AVP Commodity Research at SMC Global. Many thanks, Vandana. Thank you so much for taking the time out for this discussion. And over the weekend, we've seen a lot of news developments really impacting gold and silver prices. And this is a show where we will help all our viewers really understand what is likely to happen in the next few days' course as well. First up, to give us a sense and to give all our viewers a sense of as to where the prices were headed, on Friday, gold prices were hovering somewhere around a 7-month low. So they were on a declining path. But just over the weekend, when this Israel and Palestinian war started, we saw a sudden jump in gold prices. Today, as we speak, the December futures on the MCX, they rose above 57,000 rupees, touching 57,400 per 10 grams within few minutes as well. Even in many cities in India, Ahmedabad, Mumbai, we've seen the spot gold prices also rise substantially. Tell us, what do you make of this knee-jerk reaction, and can we see higher gold prices even going forward?
Hi Sakshi, for inviting me for this show, and my greetings to the viewers. As we know that gold is known for its safe haven buying, and unfortunately we were surrounded with this conflict between Ukraine and Russia. It was already there, and certain strike by Hamas to Israel, it has given certain knee-jerk reaction in gold prices. And what happened in general in the month of September, if we calculate the seasonality of 15 to 20 years, the average seasonality is showing that in the month of September, gold made a high, and from there we see a correction, and the correction continue up to October and mid of the November. So it was happening in general that we have seen the decline in recent trades. But yes, because of this conflict, we have seen certain surge in the prices, and yes, war premium is already there, and the conflict is going on, and world is not knowing that where it will move and further. So
Sure.
that we have seen sudden inflows in SPDR ETF fund, and investment buying is coming around in SPDR ETF fund, gold fund, and it is showing that now will be a safe haven buying for a couple of weeks. If we talk about the technical levels, we have seen that it went towards the level of $1,800. 1808 is a very good support for gold, and from there we have seen a surge in the prices. Now we are expecting that if it happens continuously, then we may see an upside movement in gold prices. In comics, we can expect $1,885 to 1,900 kind of levels in coming days. And if we talk about silver, silver has seen a very knee-jerk reaction on base metals. What is happening in China, base metals so decline the prices, and it has the properties of both bullion as well as the industrial metal. So more wild reactions was there in silver prices. So we are expecting support near $20 in comics. And if we talk about the upside should continue in silver as well, and we can expect a resistance near $23.15. So we should, if we are a trader, we should trade accordingly the technical levels, because I would suggest that we should not carry forward overnight position in gold and silver. And if we are a positional trade, then it is a time to go for buy, because historically it is proven that whenever we see a geopolitical tension, gold come forward as a safe haven buying, and
Sure.
it safeguard the portfolio.
So, Vandana, could you also help break this down further for the benefit of our larger viewers who are largely buyers of gold in the physical market as well? What is the kind of surge that because of this war that we have seen over the last 2 or 3 days in the spot market, and going forward, what is your anticipation of what the spot prices could be as well?
For physical buyer, I have different views because of we are already concerned about this economic growth, and we are not thinking about that with 5% interest rate. US is going to grow further, and recession trigger is already there, and China growth story is on risk, and it is witnessing the pinch. And all numbers are going down, whether we consider the PMI number, whether we consider the export import number, GDP numbers, all are indicating that something is not good in the world economy. And apart from that, for physical buyers, I would like to share that from last 1 decade, central banks, which is generally they are net seller, now they are net buyer. Aggressively they are buying gold in physical, and many countries like China, they are encouraging their citizens to buy physical gold. So this is showing that there is concern in the economic growth, and because of that they want to keep hold on physical gold. So for physical buyers, like 100 10 to $20 decline, or 1000 or 1500 points of decline, doesn't matter, because they keep it for long terms. So I would
Mm-hmm.
suggest that this is the time to accumulate gold, because I'm not expecting that it is going towards $1650 or 52,000, 54,000 kind of level in MCX. So this is the good level to go for buy. Even I would like to suggest, apart from physical buyer, Sakshi, SGB is very good option to go for buy in gold, because ultimately we don't have to pay the LTCG, and 2.5% interest rate is just like icing on the cake. So yes, safeguard your portfolio with gold. And frequently we are facing these kind of negative environment about geopolitical tensions. China is having tensions with many countries. US is involved with many countries indirectly. Middle East is they are tussle among themselves. Like, the environment is such a kind that geopolitical premium will get added on gold in near future.
Okay, so tell me, if you could tell us the rate of gold that you expect in the spot market, that will really help all our viewers really understand, because going forward we are now looking at the weekend onwards, Navratris to start, and that is an auspicious occasion where a lot of Indians wait to buy gold. A lot of festive buying of gold will start, and then following that will be wedding gold buying as well. So from the current levels, what is your expectation if the war escalates further? What is your expectation? And since you are saying this is the right time to buy, what is the kind of return that they can expect?
Sakshi, I would like to share two scenarios. If war escalates, and if we are lucky, if it doesn't escalate. So if
Yeah.
it escalates, 57,850 should be the first target in Indian MCX market, spot market. If we talk about second target, I'm expecting 58,250, 58,350 kind of level,
Mm-hmm.
and with a war premium. And if we get some kind of peaceful, peaceful steps by Hamas
Sure.
or like Israel, which is unlikely in current situations, then we may see a correction towards the level of 56,500 to 56,000. So I would suggest that the gold prices will oscillate between 56,000 to 58,250. And whenever you get the correction, just go for buy, because this is the time in fourth quarter, after making a low in September, October months. Generally, it take an upside, and it continues up to February to March month. So this is good time to go for buy for physical buyers. In international market, I am not expecting that it should fall below the level of 1808 levels. And on a higher side, I'm expecting that $1925 should be the target when war escalates.
Okay, and what about silver in spot prices?
We have seen very wide swing in silvers in both sides. So $20 is a very good support for in international market. $23.15 would be my first target for silver. Second, I would like to stick with $24.5. If it gives weekly closing above the mark of $23.15, so technical level is very important. If we talk about MCX, we are expecting 74,400 kind of level in 2023 in the fourth quarter. So yes, this is a good level to go for buy in silver, even one can buy silver ETF, silver physical, even in future market. And 74,400 should be the target for silver, because it is likely to outperform in fourth quarter.
Okay, got that. Well, many thanks, Vandana, for being with us on the show and explaining to all our viewers what could be the impact of the Israel-Hamas war on precious metals like gold and silver. Already a knee-jerk reaction is being seen, and if the war escalates, what could be the prices going forward from here and the strategy that investors and traders should adopt. Many thanks for being with us on this special edition. And meanwhile, you could stick around on Business Today television. Don't forget to subscribe to this channel as the news flows from the financial world, business and stock markets continues on the other side for you.